We're starting with our first corporate conversation this morning. Kabir Ahmed Shakir, Chief Financial Officer of Tata Communications with us. And of course, we're speaking on their Q3 numbers. A very good morning to you, Mr. Shakir. All right, before we start the Q&A, let me just quickly recap the numbers for our viewers. They're consolidated year on year is what we're talking about. Revenues up 3.8% at 5,798 crores. EBITDA up 2.4% at 1,181 crores. Net profit at 236 crores versus 45.1 crores. So a bump up there. Margins at 20.4% versus 20.6%. So, all right, let's start with the net profit and the margin numbers. And if you can give us your take on those, so what has boosted net profit this quarter and margins? Are you expecting some push or some pressure to continue because of the kind of acquisitions you've seen this quarter?
Hi, Tamanna, good to be here. Firstly, let me talk about margins. Margins, I think, are quite clear reflection of how we are executing on our strategy. Our margins guidance, or rather ambition, has been in the range of 23 to 25, and post-acquisitions they had come down, and now they are steadily inching up. So I'm quite glad that we are executing on the margin strategy. I wouldn't read too much on the PAT because it is a base effect. We had a provision that we had to take in the prior year, and because of that is why you see a big jump when you see the year-on-year numbers on PAT margins, and that provision that was taken in the same period last year was 2 quarters later, reversed. So 2 quarters from now, when we speak, you will probably see the reverse effect of that coming in. So that's quite mathematics. So if you look at Tata Communications performance, it's best to look at EBITDA and EBIT rather than getting into PAT, because that has all the implications of these tax refunds and all the provisions that we actually make from time to time.
Okay, so then let me look at the EBITDA, and you've had a growth of about 2.4%. What is sort of weighing down there, if you can give us a sense? Whether, of course, has been an improvement, but what has been the big challenges this quarter? And do you think that you will match your FY25 revenue guidance?
We haven't given any guidance per se, Tamanna. We have only outlined to the market that overall we will double our business by FY27, and we continue, with that aspiration. Of course, there have been macro, headwinds in the last, couple of quarters. Of late, now we are seeing some encouraging sentiment, coming through. We will see all of that. That was already visible in our first half order book, and hopefully that will reflect in quarters to come when we see that revenue panning out. As far as margins are concerned, as I mentioned, had we had even more growth, then our operating leverage would have kicked in, and we would have demonstrate a higher number. But we are pleased with what we have delivered, and it's absolutely in line with strategy and with what we have told the market.
Okay. Hi, Kabir. Can you take us through the digital vertical, because there seems to be some positive tailwinds there? Is that a sign that things will improve heading into the fourth quarter? And I understand that a lot of people are watching that FY27 number that you've spoken about, and they're saying that the work that you will have to put in to achieve that number gets tougher as we go because of the kind of ground that you will have to make up. Of course, a lot of things not in your control. Do you think that it's still possible, though?
Look, I mean, firstly, if I were to look at the reference to digital portfolio, that's where our focus is. We have reimagined our strategy and repositioned our company to be a digital, fabric for our enterprise customers. So the digital fabric story is still a powerful story. And in the world of digital transformation and now the AI revolution that we are actually seeing, it's even more relevant, to our customers. Yes, we have to cover more ground. I think aspiration still remains the same. Whether we will achieve a quarter this side or that side does not really matter. I think what we have done for this company in the last 4 years is really uptick the trajectory of growth that we are actually been delivering, for Tata Communications. And I'm pleased with what we have done. And I don't know, the macros, headwinds in the last few quarters had pulled us down. Maybe things will change, and we will see that the customer decision makings, which is now longer, and impacting our revenue conversions, may get shorter. So we are encouraged definitely by the order book that we have and the quality of the conversations that we are seeing with our customers. So we are sticking to our ambition and our aspiration of doubling data revenues.
Okay, the question is whether or not it is one quarter this side or that side. Point well taken, because a lot of things, as they say, is not under control. A lot of things are not under your control. But let's talk about the margins, because you said indicatively your aspiration was around 23% and you moved upwards. You've gained some ground there. At what point do you move to that trajectory that you want to be at?
I'll give clarity on all the three financial KPIs that we are quite proud of. From where we were, we took them to all-time high, and then acquisitions happened and they slipped as a result of the mathematics. The first one is debt to EBITDA. Our stated ambition is that we would like to stay under 2x. My ambition was that we will get there this year itself. But because of the recent Forex move, maybe that will shift by a quarter or so. The next one was ROCE. Our ambition is to be greater than 25%. We touched an all-time high of greater than even 29%. And then after the acquisitions happened, we went down sub 20. The same Forex impact also has impact on ROCE, but ROCE, we are confident that it will come back in a year's time. For EBITDA, our ambition was always that we will get back in FY27 back to the 23 to 25% range. And that is because as we grow the digital portfolio within the data portfolio comes at a much, much lower margin profile. In fact, it is some of the businesses within the digital portfolio are either break even or even negative, EBITDA margins. So the faster you grow negative EBITDA margin business, it has a drag on your overall, EBITDA. But still, that is the right thing to do if we have to execute on our strategy. So despite those headwinds, in 2 years' time, we are very hopeful we will get back to the 20-25 range.
Is that range achievable? Then I suppose is the question.
Absolutely, yes. Tamana, why do we even have a single doubt? Because if we look at our core business, the core business, when I say excluding the acquisitions that we have done, that is still at 23%, right? That continues to be at 23%. What we have done is we have made very, very conscious investment into our business. And I believe that if you are in the digital ecosystem space, you need to continuously innovate and fuel innovation within the organization. The day I stop that, I'm back to 23, right? But the answer is not stopping that. Answer is getting the value out of those investments and then growing the top line and growing it healthily and profitably.
Just one point that I wanted some clarity on, the decision to move out non-core assets and land sale, etc. This we will see now in fourth quarter, and the tune and what would be the size of this? If you can give us a sense of this as well.
Yeah, Tamana, again, about 3 quarters ago, we mentioned to the market that we are doing a strategic review of all our non-core assets. We got out of in one of our subsidiaries a loss-making contract. We announced the divestiture of our payment solution, the ATM business, a month ago in early December, and we are on track to close that deal. So likewise, we have a lot of land parcels, and we will monetize them. The one that you might be referring to, which will happen in this quarter, is one of our land parcels in Chennai, which we are actually selling to our associate company for data center build. That will give us about
accruals. What would be the accruals on your balance sheet of this?
It will be around 800 odd crores.
Okay.
Yeah. So and we will continue to execute on that, because if we have to drive the top line and we need to fuel those investments, the way in which I look at it is there are huge source of funds, including AI and the investments that we are making in AI. But we also therefore need to generate, a source of funds internally in order to fuel, those innovations and even inorganic, if it might be. We've done enough efficiencies in the business by improving our working capital and hygiene that we have on cash. That is improved significantly in the last few years. Now we're looking at all the assets that are sitting in my balance sheet that are not facing my customer. They need to be repurposed towards investments to drive customer growth.
All right. Thank you so much for speaking with us as a CFO of Tata Com on the numbers. And yeah, they're sticking to their math and their guidance. The sale of assets, land in Chennai, should add about 800 crore rupees to the balance sheet in Q4 as well.